Hi everyone, welcome back to Birich Podcast. Recently, I was going through the annual report of the Karnataka Bank for the financial year 2023 to 24. A few questions arose when I was going through that annual report. And before we go into this video, we'll answer a few queries which was asked in the last video which we posted. So one viewer has asked regarding the PBI ratio. The standard value which is mentioned when analyzing a company with respect to PBI ratio is that when it is below 15, the company is considered as undervalued. But when it is more than that, the company is overvalued. Why is that the number is chosen as 15 and not any other number? What was it when you are beginning the investment journey?
Well, there is something known as, let me show you. So this is a chart I want you to put on the screen.
Yeah.
The name of the site is nifty-pe-ratio.com. So you can see how Nifty has been from 1999 month-wise. Okay. 12 months, you see each month, right? So when we say it should be 20, is that we're looking at the history of the Nifty. Now the question is, how far should you take the average to?
Okay.
So if you are a person who believes in this bull run, then you'll probably only look at maybe from 2000 to now. And if you take the average, then you'll say the median where Nifty keeps on, the middle statistic mean would probably be around almost 27, 25. If you're like me and Anand and you expand it to include before this free money access was given, you will expand it.
That was after the
financial crisis of 2008 to the. So then you see, if you expand it, then you'll get a better view. Because if you see, these high PE ratios have only been here for a very small band. Majority of the time, the Indian market has been sitting in the green.
Okay.
Green zone is considered below market value. Market is undervalued. Red zone is considered market is overvalued.
Okay.
So it's only a very small time when the Indian market was overvalued. Majority of the time, it's been undervalued.
Yeah.
So when we're saying the current market looks expensive, it is based on this history. It is not some number Anand just decides to tell. So when I used to start investing way back, we used to say the median was somewhere in the 15. Now we have moved it to 20. Because from 2014, 15, if you see, it has been always lopsided towards this.
Okay.
So there is a high possibility that we might enter a period of time when it can enter a cooling off period where we stay below 20s for a longer period. But the chances of that happening are much lower than before because the simple reason the Indian economy has been growing. We are making investments. The Indian population has become more educated and there's lots more investment opportunity in India, job opportunity. So if you see, it's not comparing apples to apples. Like if you see the year 2009, the average PE was all trading at well below 15, 13, 12, 12, yeah. So it was very low. So that was a different time. 2009, India is not there anymore. So all that is gone. So that's why when you also look at the mean, you also have to take the context of what Indian economy is doing, where we are, and what is our growth prospects.
Okay.
So taking all that into consideration, taking Indian Nifty to be around 20 is fair value. It is considered like, okay, if Nifty is at 50 PE, it's fair. Or a company. If you're looking at a company, then you don't look at Nifty PE.
Yeah.
This is only if you're looking at Nifty 50. If you look at a company, then of course you have to break it down into each company. So let's say we take one of your favorite companies, ITC is one of your favorite. Now you look at PE ratio of ITC, maximum is 29.1. That's from data from 2006 to now, almost 20 years worth of data he's crunching here in Screener. And he's saying it is 29.1. Right now it's at 30. So it is
marginally ahead
over the full maximum. So let's say, look, for the last 5 years, you see, it is 21. That means it's completely overvalued.
Yeah.
So it always depends on the context. If you say 10 years, it is close to where it is right now. So it's important to keep in mind the analysis should be done within time slots.
Okay.
So your investment goals also has to match what you're analyzing. Let's say you plan to make an investment for the next 5 years and you need it from 5 years. So then the companies which you're analyzing, the PE ratios, you should analyze for how they did for the last 5 years.
Okay.
Let's say you're going to be long term, like Anand says, and you're going to invest for the next 20 years. Then you need to expand and see what happens over the last 20 years these companies have been doing.
Yeah.
So then you can assess and see, okay, how are the evaluations of these individual companies been moving? Like I said, Also, when you take its expansion of 20 years, back then it was valued differently. Now what it is, because Indian economy has grown. So that also you have to bring into the mix of your understanding. So you put all that together and just not look at numbers. So this is what's important when you're looking at P. Okay.
And going into this video, I was going through the annual report of the Karnataka Bank, and a few questions arised. The first one is in the profit and loss statement for the year 2024. They have mentioned the details, and when looking at the cash flow statement, they have mentioned for the year 2024, and it is given in two columns without headings, and some of the values are given in brackets. So what does that mean?
Okay, so this is what we're looking at, right? The reason why you're asking this is this is how accounts are written, right? One is minus column, one is positive column.
Okay.
This is what is leaving, right? And what is coming inside. And in that also it can be positive and negative. So provision tax has been said. Then profit and fixed other. So there is actually some taxation which is done. So they're asking the government to return the money. So that is minus.
Okay.
So the brackets means it's a negative number, and the columns means money going off and money coming in. Cash flow statement is what? Remember what we spoke about. Compare it to you.
Financial health of the company.
It is your bank balance.
Yeah.
Right. When you go look at a bank statement, what is there? Two columns are there, no? What are those two columns?
Credit and debit will be.
Correct. Same thing. You understood?
Yeah.
That's all it is.
Okay.
So instead of writing negative number, they put brackets. Bracket is negative. Without brackets, it's positive.
So I hope that this video is informative and you had some knowledge about price to earnings ratio. If you found this video useful, please share it with your friends whom you think it will be helpful for them. And please subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.